The Federal Reserve is attempting to keep the stock market alive by injecting as much currency as possible into it as real money flows out. As the US loses buyers for its garbage debt, the Fed will simply step in and buy it all up. It's a wonderful plan which has worked very well. In fact, it has given us an excellent opportunity to predict exactly where the stock market will go at any time. Using this simple chart, you too can predict the stock market. You came here for the truth, so let me unveil that for you. Let's look at the stock market today and its interaction with the Federal Reserve. I want to show you central bank charts related to all of this. Except for the first one, there's no particular order on here. Let's look at this right away. As you see, two lines, the SP 500 in the blue and the Fed's balance sheet in the green. And this starts from, let's say, mid-2012 and goes on until present day. What we can tell from this, there is no judging this whatsoever, is that these two are completely correlated. As the Fed prints more money, the S&P goes up. It is a direct correlation that cannot be refuted. This is all the evidence you need to decide, to determine that not just over the past week or the past few months that you see some charts sometimes trying to show a trend. This has been years on end where these two numbers or charts have been in this way. So we know that for the foreseeable future, this is the best way to determine where the S&P 500 is headed. Now, I'm going to highlight exactly what's on the right side over here. And you can see based on this trend, it has to come down. This trend doesn't lie for the past few years. Yes, there's ups and downs, surely, but for the most part, what we can see is that it traces this line. And there is no other way to put it. If you want to know where the stock market is headed, just look for the Fed's balance sheet and vice versa. Now, if the S&P decides to go up, it's going to have to be as a result of the Fed printing more money. Will there be the introduction of QE4? I don't know, but we look at this chart and we can determine exactly where things are headed. And that's just the way it is. Let's move on to the next one. As you see, the 12-month change in central bank assets, and it's showing all of these major central banks around the world. Each one is different, of course, but follow the line. The line is showing you the total here, and you can see that a significant amount has been printed since, just before 2012, and it's just going up and up and up. And just recently we've seen some stagnation, but in fact, if you look at it from whether it's the Bank of Japan, whether it's the ECB, everybody's printing. Maybe it's not all at the same level, all at the same time, but for the most part, central banks are just pumping out money, and they're giving out these extremely low interest rates right now, which makes the money, that currency, I should say, it's supposed to have a current. It's supposed to be flowing, and so that's their intention. That's what they're trying to do. Of course, as they do this, we can see it. Anybody who's paying attention can see that it actually just weakens the economy. It dilutes it. It's actually diluting it as time goes on. So instead of having to print $1 million, today they have to print $1 billion, and tomorrow they have to print $1 trillion. And it has the same effect, even though it's more money. It's, it basically weakens, it dilutes over time. That's what I'm seeing with this. Then we move on to this. More and more and more. Aggregate balance sheet of large central banks as a percentage of the GDP. Now, GDP itself is a fake number, but let's just pretend, mainstream media here. Everyone, please. Okay, so the GDP, we are seeing this supposed calculation of the value of the economy. Okay, so this countries are, whether it's let's just say the US trying to maintain a certain level of GDP, and you need to factor in things as a percentage of that GDP, because a value today doesn't necessarily equate to a value 10 years ago, 100 years ago. So you can use it as a percentage of GDP to try to get a better idea of things sometimes. But when you look at the balance sheets of the central banks, things are just going up and up and up. It's getting worse. It's not a better thing. It's a worse thing, because the debt, whether that is on any level, personal level, as the nations themselves, the central banks themselves, is getting more indebted, but that is, in fact, the system is built around debt. So that's what this chart is showing you. And then this right here is huge, because the rate hike odds and the actual economy going down. So you got the rate hike odds going up, the economy going down simultaneously, showing you this disparity, this schism which has formed in between the two. And you know that as the economy slides downward, they should be less likely to increase the interest rates. Yet this chart shows that they believe that they'll increase the interest rates. I don't know what's going to happen with any of these meetings, whether it's going to be September, December, or not at all. I think that the economy should be doing well for them to increase those rates. But if it's not, what signals are you sending? It doesn't make any sense, because you're trying to read the words, at least that's what forward guidance is. That's their own words, forward guidance, saying, okay, the economy is good, we're going to increase interest rates. The economy is not so good, we're going to decrease them. We need to create more jobs, so we're going to print money. That doesn't actually make sense, but these are the things that they say. But then they go against that. So what in the world are we supposed to think about? How are we supposed to manage this? If you were a fund manager, how do you look at all of this and really play it properly? You can't. You cannot play this properly anymore. And as a result, a lot of money is fleeing into so-called defensive assets. And that is a huge trend which is going on right now. I covered it in another video. That's all I wanted to show you for this. Now, look at his face. This is just, it's just a picture, but I just wanted to show you this because, I showed a lot of these videos and you see a lot of the negativity in the comments, which, by the way, just in case anyone's wondering, I absolutely refuse to respond to any negativity. You know that I'm one of the YouTubers out there who replies more than any others that I've seen anyway. I try to reply to every single comment within that first day or maybe that second day. I try to anyway. There's so many, it's impossible, but nobody gets back to their subscribers more than I do. However, you see the occasional negative comment. I don't reply to that because people have their own issues, their own opinions, and that's fine. There's nothing wrong with that. That's what this is all about. We need to share information, put it together, and sort of create our own analysis. So that's what I'm trying to do. I'm trying to bring out my version of the truth, what I believe is the truth. Well, you get people that sort of look like this, and I just have to figure, why are you here? If you don't like the information, there's other YouTube channels out there you can check out, or just put it on CNN. You can see Jim Cramer even. He's got some great stock advice for you for the next 3 hours when those are valid. And then tomorrow he comes up the next day and gives you some other advice. And, this is the kind of reaction that I'm seeing throughout. But it doesn't even matter necessarily, If you want to look like this, if you want to make a face like a prune, then that's fine. Totally fine. Absolutely. You're entitled to that. I would just say that I'm appreciative of all of the subscribers out there. Thank you all. If you found this video informative, please give me a thumbs up. Last but not least, if you found the video informative, I know you'll find my book, The Money GPS, even more informative. If you want to look through the book, just go over to Amazon where they have a look inside feature. That allows you to flip through the pages of the book and see if you like it. Take care.